So, hi all. So, I'm Sean Bijoy. So, today I am here to introduce our a new term which is dead cat bonds. So, today in this video, you will understand that what is dead cat bonds. So, I am here to introduce a new term in the stock market which is the dead cat bonds. So as you know that the stock market is always uncertain, and we cannot predict what's next or if the price can increase or decrease. So by different analytical ways you can find, but at the initial stage you are not able to find what is the price or what can be the price of the stock particular stock. So today I am here to discuss what is dead cat bonds. As you can see, a dead cat bonds is a short-living recovery in the declining of asset price, and it gives inventory fall hope down and downstream continuously. So, as we know that sometimes the stock of the certain stock price may rise higher than expected, and it can reduce within that day. So, if a particular stock have increased fairly by 100 rupees per stock, so it is an unbelievable or it's not that too expected by that company. So sometimes the stock price may increase and can increase suddenly. So there's no stability in that in the stock price. So it is known as dead cat bonds. So this is the first slide which is I'm taking it's dead cat bonds. So next we will deal with the characteristics of dead cat bonds. So the first it says that occurs during a downtrend. So the asset price have been constantly falling. So as you know that the price reduces fastly. So it's because the asset price may continuously falling. The asset price when the asset prices of the company reduces, it occurs a downstream in the downcats. Next is short duration. So, debt can bonds is temporarily leased for a day. So, the main character, the it can occur only. So, this occurs only or a temporary days or for at least a few days or a week. The price inflation or deflation can be occurred in a for a or 1 week or with a few days or more than that it can't occur. So, it's just a temporary event. Next is low volume. When the trade volume is low, you know that the buying share of this is the trade volume is low, then then it comes to a declining stage. So it can reduces the price of the stock. Next is resumptions of downtrend. The price soon resumes its downward tragedy. So the price goes down with the downtrend of the stock. Next is identifying the potential debt of cat band. So what's the potential? So in this slide we will learn about what is the potential debt of the dead cat. Next is weaker relates. The price increases is not sustained to or lack a strong momentum. So, as I told earlier, the price of increase, the price may increases, but there will be no momentum or there will not be any stability there. There's the sustainability is less. The sustain is less in that particular particular stock. Next is low volume. As I told earlier in the characteristics, the low trading volume during the during the stock wavings to the cat bonds. So the low volume of the stock can occur during the cattle bonds. Next is resistance level. So it's one of the most important potential. What if the price falls to break down the key resistance? It's likely to be a dead bound bounce. So that it falls frequently or it falls ways to break down the resistance. It comes under the resistance line. Next is technical indicators. Now, you know that due to by the technical indicators, some RSI and MADC can help to confirm the weak bonds weaknesses. So next slide, shown some examples of the cat dome bombs, and I will say a real example, which is then can which can say that Suzlon company, the stock have increased rapidly, and can it also decreases within 1 or 2 weeks. So no, 1 week. So next I will take about the strategies through avoiding these techniques. So we can avoid investing in such companies by focusing on the fundamentals and diverse portfolio. So by looking the fundamentals of the company, you can always assure that the company have a stability, and there is no such momentum or such sustain we can by looking the fundamentals and portfolio, you can always clear that the company stock or the company is always following the rules and regulations, and having a clear and having a continuous stock, continuous or a decent amount of stock. So this is the topic I like to cover. On conclusion, I can say that it's a common occurrence that debt bonds are commonly be a market in the it is in the market always, and careful analysis. You should always analysis carefully. Only then you can avoid investing in such companies and protect yourself. I can say that by a proper analysis and by a proper analysis and a proper information, grabbing the information, you can always protect yourself and your money. So this is all about a dead cat bonds. So always like to say that always be protect yourself, your fund, and always do a good trading. So thank you.